You know, trading can absolutely be boring at times. Matter of fact, most times as a trader, we're sitting in front of the charts for, hours on end sometimes trying to find a solid trading setup. Okay. Now, it all depends on, whether you are a swing or a position style trader. But for me, I'm all about scalping. I'm looking for some quick setups or beautiful high probability setups, I should put it that way, in which I can trade on a daily basis and make money. Okay. I'll treat the markets like an ATM machine in a sense. As I get up in the morning, I do what I need to do before getting in front of the charts, and my day starts. And by the time I get in front of the charts, I'm basically analyzing, top-down analysis, trying to find a beautiful entry. I do this 5 days a week, trading no more than about an hour or two a day. Long gone are the days of having to work 8, 10, 12 hours a day. Trading, and if that's you and you work in a full-time job and you love and you're passionate about your full-time job, nothing wrong with that. I'm not knocking anyone, all right? But the way that I actually trade, when it comes to scalping these markets, especially the indices, guess what? It actually works, okay? It's all centered around one key thing. Is your trade high probability or not? Okay? I'm going to show you the difference because a trade can be low probability just as well. We're looking for that magical imbalance, that magical gap, what a lot of you may like to call an FVG. I prefer not to call it that, a fair value gap. All right. But it's all part of the strategy and how I trade. All I'm doing is looking for, what's going on my higher base chart first. Now I trade range charts and I'm looking whether to see if the market is bullish, meaning breaking structure to the upside, constantly taking out highs, or constantly taking out lows, breaking structure to the downside. That is part of the 1, 2, 3 setup process in which I go about, when it comes to trading the future markets. Simply put, all right. Now you could do this if you trade futures, options, whatever it may be, because one concept that you need to master before all, I will say this, is market structure. What does that mean? That really means identifying which way the market is moving and trading in that direction. So if you are trading like me, a range-based chart like my 120, and the market is telling you and screaming, go take your trades to the upside, guess what? When I scale down and move down to my entry chart, all right, my lower range chart, guess what? I'm looking for the same thing that's going on in my higher range chart. If the market is bullish, I'm looking for demand setups. Then I'm just going to look for demand setups on my lower range chart, and inverse of if we're moving to the downside. All right, that's all it is. Now, a fair value gap is nothing more but a small imbalance in between candles or back to, an actual zone itself. You hear me lots of times in the video talk about gaps or imbalances back at the actual zone. What does that mean? That's where the market has pushed away or moved away quickly from a specific zone after breaking structure, and it left a gap on an actual candle. And what that pretty much means is that when the banks and institutions are making their moves, pushing to the upside or to the downside quick enough, and that gap doesn't get filled quick enough before the break of structure, more than likely there are orders rested on the table, on the books, in which they are looking to fulfill when the market gets back to that area. Now, me being a retail trader, I'm looking for the opportunity or time in which they retrace back to the zone after they break structure. Again, after they break structure, because that BOS is one of the most important things that I need to see and I want to see when I'm taking my trades. So if that market is making swings to the upside, I'm looking for key pullbacks to those areas of demand. And when they get back there, I got to see that FVG, that fair value gap, that imbalance at the zone for me to be interested enough to actually want to go long. I'm just going to show you a few examples today. So continue watching the video through as I share the examples. But at the end, I'm going to talk to anyone out there that's interested in joining and becoming either an elite or an ultra elite supporter of the channel for basically pennies on the dollar a day, guys. It's very inexpensive. Why go and pay hundreds and thousands of dollars? Well, I should say hundreds of thousands. I mean hundreds or thousands of dollars for someone's trading course that's just not going to work out for you. I provide the relative or the important content here on the channel surrounding how I personally trade. Okay, for a fraction, pennies on the dollar a day, and you can become an elite or an ultra elite supporter of the channel to where you get that top tier behind the scene access, private video content to where I walk you through trade examples that are very important, okay, covering the strategy as a whole as well. So we're talking about market structure, price action, where to take profit at, where to take, place your stop losses at. I give you a valuable list of video content that you need to tune into and watch that covers some of the most important concepts and elements to the style of how I personally trade myself, as well as other video content that can help you in your own personal trading. Now, I'm going to talk about that towards the end because you may want to become one of those members, especially if you want to learn or understand pretty much the strategy into how I actually trade surrounding supply and demand, okay? Now, when it comes to this gap, I'm going to show you an example. So, for example, today, for example, we saw the market do what? All right, we see it breaking to the upside, right? Now, when it took out this high here, all right, into the early portion of today's, say, the overnight session, right? It broke this high right here. That's what we're looking for. We're looking for swings in the market where the market is making these. That's a major high there. That's a major low. But where it breaks above not periods, but of higher highs or higher lows. So as long as we're bullish to the upside and we're looking for opportunities where they are pulling back to a demand zone where there's a gap at or fair value gap at, that's what we're looking for when it comes on the higher base chart. So they broke structure above this area. Now, it wasn't a break and close of structure, meaning where they absolutely closed above it, but they still wicked above it. That is a higher high above this high right here. All right, so you understand that, correct? So what we're looking for are areas in which the market pulls back to key areas of demand, like it pulled back to this area of demand right here, okay, right here, but it also pulled back to this one as well. So it rejected at that one, but you have to understand, looking at price action, that the market can, react here at this area here as well. But it comes back down to an area that I really was interested in, and there's a major gap on this candle right here, a fair value gap, okay? So first and foremost, we're looking for a break of structure. Then secondly, we're looking to see is that zone high probability versus low probability, and it's all centered around one thing. That fair value gap, that imbalance back at the actual zone itself. So you see what the market came down and made a lower high, and then a new low right here. But then it turned back around and we broke structure back to the upside, taking out this high right here. Guess what? It left behind a fair value gap back at this actual demand zone. Okay? So I'm not going into detail about the actual strategy in itself surrounding, the full-on step-by-step process, because I talk about that so much here in this video. But I just want to share with you an easy way of being able to identify the fair value gap or the imbalance resting back at the zone, which is all part of the strategy and how I trade. And if you watch the video content, you will pick up the rest of the steps that will aid you or guide you in how to trade this strategy the correct way. Now, again, the essential part is understanding and being able to identify a structure break. High, higher, low, breaking structure, okay? So there's a demand zone resting right here. It's on this area, in this area here where we got the break above, okay? But the gap is on this candle right here. Why is the gap on this candle right here? Because this is the candle, that green candle there, that broke above this last down bearish candle. We got a push up, a swing back, and then a break above, okay? So this is the bullish candle that took out that last bearish candle, okay? So the gap's going to be on this area right here. Now, if I remove this demand zone right quick, you may be asking the next thing, well, how do you measure the gap itself? All right, we'll blow up a little more so you can see it. So when the bullish candle here breaks above this candle here, right? All right, so we're going to use some arrow lines, okay? It breaks above, and then we get another closure of a candle here. But the wick, the wick on this candle here comes back this far right here. So the gap is going to be from the top end of the candle inside the zone, which would be right here, okay? Top end of that candle, but keep in mind, this is the gap, oh, excuse me, not the gap, but the candle that created the gap back at the demand zone. And then we're going to mark the bottom end of this bearish candle right here, okay? That is our fair value gap, all right? So all we're looking for is a break of structure, an area where there's a gap on a candle that broke above, in this case here, the last down bearish candle before we broke above, all right? And this is the candle that broke above that last down bearish candle right there, and that's going to be the candle that the gap rests on, okay? So that's the fair value gap or the imbalance, whatever you want to personally call it. Same difference, okay? But the measurement is all centered around if there's any candles on the inside, that last candle before the candle that broke above this last down bearish candle, which would be this candle right here, the top end of that candle, the bullish candle here, the candle that broke above, okay, this is the candle that took out that bearish candle here, and then the next candle that closes, how far did it come back? All right, to the bottom end of this wick of that candle right there. So that's our gap right there, the in between right there. So we see what the market comes and pushes up, but when it traces back, did it fill all the way back in between this candle here, or this gap here? No, it didn't. But so then it pushed to the upside, and we got a break of structure right there. So we're naturally looking for the gap right here to be filled back to the downside, that fair value gap. When it comes back, look what it does. It fills that gap. It taps into the demand zone and fills the gap. We're going to go long here. And this is a beautiful long opportunity because we have where the market is now making, or we're tracing back, making a low, lower high, aggressive selling. So you have an opportunity where the market is tapping into a demand zone right here. Okay. And then above, we got a supply area. So we're looking at that point, if we get the rejection right here, to go long. Now, I'm not saying to go long off the higher range chart, even though you can if you have, solid amount of capital and you know how to trade high, off of a higher chart, whatever the case is. If you can trade lower charts, you can trade higher charts. The thing about it is that you have to understand this drawdown amounts that the market once it taps into a zone could be fairly, how should I say it, significant if the market was to pull back against you. Like right here, the market filled the gap, tapped the zone off the higher range area right here, or the higher range chart. Then it pushes to the upside, right? But it doesn't quickly enough go up to the upside and fill, say, for example, the gap all the way back up here, or the gap back up here to the supply area. What it does is it pushes up, one candle closed. Maybe you got into the trade right here. It pushes up. Now you're in profit. And then it swings back. Okay. And naturally speaking, your stop loss is going to be back here. Never stops you out. It continues with momentum to the upside to fill all the way back to the gap in this supply area right here. So this is a fair value gap closure. All right. We filled it back down to the demand zone, reaction at the zone to fill back up to the areas where imbalances rest above, or fair value gaps rest in between candles. Okay. Because fair value gaps can rest in between actual candles themselves. Like the bottom portion of this bearish candle to the bottom of the bear portion of this bearish candle left a gap right here. And then this next candle here, the wick of it came back this far. So there's a gap right here in between. And that's the gap that needs to be filled in between candles, whether they're bearish or bullish. But this also was classified as a fair value gap, or a gap resting back, or imbalance resting back at an actual supply or demand zone. Again, this is a demand zone gap right here. All right. Well, there's a gap at this fair value gap on this candle right here, this bullish candle. This is a supply zone right here. So if we were to mark up the supply zone right here, I'm just going to use this box right quick. This will be the zone, just to show you right here. But we're not looking to, right here at the bottom end of the zone, we're not looking to take a trade right there. We need to see the gap. The gap is to be filled. The fair value gap is to be filled because this is the candle. So fair value gaps, when it comes to supply zone, is opposite up. We're looking for the last bullish candle to the upside, and then what candle broke below that last bullish candle? This one here. Okay. Are there any other candles resting above the candle that broke below that bullish candle to the downside right there? Yeah, this one right here. So the gap is going to be from the bottom end of this candle here, the candle that broke down or broke below that bullish candle there. The next candle, how far back did it come back? Which is the third candle right here to the wick, back end of the wick of that third candle. On this candle right here. This is your gap right here. When the fair value gap. So when the market pulls back to this area, it taps to the supply zone. It fills the fair value gap area right here, right? And this is the area we're looking to go short from. All right. And we're going to aim for areas below, specifically any type of gaps that may have been created or imbalances in between candles at the rejection point back down and possibly the low right here. Okay, that's what we're looking for right there. So that's how we can, when it comes to the actual strategy and how I actually trade the fair value gap strategy, all surrounding the supply and demand strategy. That's what I'm looking for right there. Is one of the most critical portions of the actual strategy is that fair value gap. Okay, because without it being there and not being a gap in between candles, then guess what? It's low probability. Because if this candle right here was to fill, the wick was to fill the gap all the way back up here before the market had opportunity to retrace back to it, guess what? All right, meaning it made a low, lower high, and before it broke below this low right here to create a new low, meaning breaking structure, if this candle right here, before it actually came to the, say, the right here coming to the downside, meaning, and before the market retraced. So let's say this candle right here came down. All right, it broke right here and closed here. But before it closed right here, before the actual candle right here closed, the wick came back and tapped into that and filled that gap at this area here. Then that means it's low probability. But because this candle closed to the downside and the wick didn't pull all the way back that far, it left that imbalance resting right there. So as the market kept coming down, we still have room to fill back to that gap in that area or that zone right there. Same thing here. If this candle right here, before it closed, came back and filled that gap, all right, guess what? And then the market starts continuing pushing to the upside. That leaves this to be low probability. But because it kept pushing to the upside, it came back this much and didn't fill the gap. We've got opportunity when it gets back to this area here and it fills. It taps this zone right here. Let's mark this up correctly. Okay, right there. Let's do this right there. And we still have from here to here, all right, to fill in the gap back to here. Guess what? The market gets there, it can react and fill the candles going back to the upside, back to the supply area. This works actually every single day, guys. I mean, you have to just be patient, look for the right setups where you have the which mark high probability setups. And this is how I do it each and every day, trading futures 5 days a week. This is how I am profitable, because I'm using my higher base charts to tell me the direction, but I'm also marking off higher base zones, and then pretty much I'll scale down to my lower base chart to refine the better entry points. Okay, hopefully that makes sense. So again, what I want to say is that if you really want to, kind of understand and educate yourself on the full strategy, with centered around supply and demand, but specifically the gaps resting back at the channel, because that's but back at the zone, that's what's going to make the difference of the types of trades you want to take. Okay, because they could be low probability. If so, your chances of 50-50 could be there, but higher probability zones where there's an actual gap back at the supply or demand zone are going to raise or increase the interest, but not only that, but the probability of the trade working out in your direction. Okay, in your favor as well. Now, if you are interested in becoming an elite or an ultra elite supporter of the channel, listen, the link is down in the description portion of the video. There's a link titled Ultra Elite Supporter there. And once you click on that, you're going to see 3 tiers pop up. Choose either the second, which is the elite tier, or the third, which is the ultra elite tier. When you click on each one of them, it's going to list out the perks and rewards you receive. Say, for example, with the elite, by becoming an elite member or supporter of the channel, very inexpensive, you're going to see the price there. And you're like, wow, if I break this down on a daily basis, like pennies on the dollar a day. Okay, it's per month. So what I want to say is that, and it's very inexpensive. When I say that, I mean, it really only adds up to a few dollars. Now, what I want to say is that with the elite supporter membership, what you receive are my trade breakdown videos. I posted one today. These are trades that I posted over on our Discord, and then I go back and I break them down, because this is how people really are pretty much learning or educating themselves on the strategy and how I trade. And we got people. There's a testimonial section there on the Discord. And again, I may not mention that, but if you're interested in joining the Discord, the link is down in the description portion of the video. But again, there's a testimonial channel on the Discord, and it speaks in volumes. As far as the strategy work or not, I'll allow that section of the channel to pretty much, allow for it to speak for itself, and people who are part of the community can speak as well. But it does work. Okay. Now, I can't guarantee everything or anything to everyone out there or to anyone, because how you trade, your style on how you trade, and you may be coming from bad habits and having to relearn things, or maybe you are the best types of traders I found out are new traders that are new to futures trading, that definitely come across this channel, and then they pick up on the right way of things, of going about how to do things. Now, again, I can't guarantee anything, because people's perspective on how they read the markets may be different than mine, but that's why I try my best to break things down so that you can understand things, and to understand things in the simplest or most elementary form. Now, again, to become an elite member, you receive all the trade breakdown videos, the video playlist, and a great video that I cover surrounding market structure if you're struggling with that, because that is a very important concept that you need to master. Okay, if you want to take it one step up and become an ultra elite supporter, you receive everything I just mentioned, plus the live recorded trading sessions. All right, the choice is yours, but that's what the sauce is. That's where the blueprint, the cornerstone of how I trade, that's where it's at. That is nothing more but the by becoming a member or supporter of the channel. It's all through YouTube's tier membership program. Okay, but I make it available here on my channel, where you can gain access to all that backdoor private community video content that can definitely help you out in your own personal trading. But I'm not twisting anyone's arm. whether you do so or choose to do so yourself is up to you. Okay. I will say this: those that are members or supporters have signed up that way, they have curved their edge as far as the learning process of being able to learn quicker. I will say that. And if you go to the testimonial section on the Discord, you'll see people passing the challenges, the prop firms, the evaluations, they're passing them, so it speaks for itself. All right, guys, that's all I have for you today. If you have not went ahead and clicked the subscribe button right now, make sure to click it before you jump off this video. Just as well, make sure that you click on the bell, turn on your post notifications so you do not miss any of the uploaded content here on this channel before you jump off. And last but not least, if you do me the biggest favor and drop a like on the channel and on the video and any video here on the channel, I greatly appreciate it. To everyone out there watching today's video or whenever you come across it, please have a fabulous, fabulous weekend. I appreciate everyone tuning in and watching the video content as you always do. Take care and see you in the next one.